Hello, crypto cats. My name is Tom. I am the crypto investor, and today I have a cold. But I've been playing around with M2 money supply, and I think what I'm looking at is quite interesting, and it's something I wanted to share with you. If you're not familiar with M2 money, this is basically the value, well, the amount of US dollars printed. And so it's important that we consider that the valuations of assets today, gold, Bitcoin, the Nasdaq, is not the same as it was a few years ago, because we have to account for all of that money which is pumped into the system. And we all know that that the money printer really went burr after the COVID crisis. So in February 2020, we can measure it and we can see that 41% of all the US dollars in history were printed in the last 2 years. This is an extraordinary statistic. So what we can do is we can then divide different assets by that. So first one, we can look at the Nasdaq. Let's turn my scribbles off. This is the Nasdaq without dividing it by the M2 money supply. It's this big ski slope. Obviously, we've had this pullback of late, but it's pretty aggressive. What we can do is we can then divide the Nasdaq by M2 money. And you can see that the Nasdaq has done well. Even with that 42% of dollars being printed, the Nasdaq has still managed to be up and to the right. And what I found interesting looking today is that when we divide the Nasdaq by the money supply, let's just go back and look at it. This was the pre-COVID peak. This is without the money supply. This is the pre-COVID peak for the Nasdaq in February 2020. And then of course, if you don't account for the money supply, hey, the stock market's up 44%, 42%. When we account for that money supply, of course, we know that there's 42% of money that's been pumped in. So you get this, and you can actually see that right now, the Nasdaq is bouncing off the pre-COVID high, the February 2022 level. And it bounced here in March, bounced in May 2021, and it's bouncing right now. So this is structurally quite significant. It's a big piece of support. And obviously a lot of big money uses M2 to trade. This is clearly used in a lot of charts because it's acting as a significant support level. All right, so let's compare it with a few other assets. Okay, gold's an interesting one because gold, okay, this is gold without M2. You can see that gold, okay, it's just right now at the high that we saw back in 2011. So, you can see that it's gone sideways for 10 years. So when we add money supply, obviously it's not going to be very pretty. Let's add money supply. Look at that. So that's gold. There's that 10 years ago peak. And so in real value, gold is down 56% in the last 10 years when we account for money supply. So it has not been a hedge against inflation. Of course, you could say that this is the same time that cryptocurrencies came out and maybe they've been eating its lunch, or maybe people favor productive assets. They prefer to own equities that make money and dividends and, effectively accrue value that way. So let's start looking at some cryptocurrencies. All right, so we all know the Bitcoin chart, and this is the Bitcoin chart with M2 money. And it's fascinating to see that the 2017 peak, the past cycle high peak that we saw back in November 2017, is in fact the support where we bounced throughout May, June, and July, August in 2021. That's exactly where we came back and back tested. So $20,000, that peak, is actually $30,000 in future money. So effectively we're back testing that previous high, and often resistance turned back to support, and that's what we often see with charting. And so actually, for all intensive purposes, we can measure from that previous high in 2017 to now. You could actually say that in reality, the market's up 25%. So, really, we're actually sitting in kind of 2017 value at around $25,000 Bitcoin, not $39,000. So I think it's a very interesting thought process to do this. And you can also see that when we account for the M2 money supply, we almost didn't make a higher high. We just by a whisker made a higher high. But we, instead of the 6% high that we saw when we look at the traditional you can see that there was a significantly higher high, 6% or so. We don't actually have that on the M2 money supply. All right, and lastly, let's look at Ethereum. Okay, so just like with Bitcoin, Ethereum came back and found support exactly at that same peak that we saw in 2017. So exactly the same as what we saw with Bitcoin. This should be green. Resistance is green. Support is green. Resistance is red on Tom's charts. And so since then, we are up 45% since 2017. So Bitcoin up 25% and Ethereum up 45%. And then just to add a little bonus material, if you're into equities and you're interested, so we know that, we can see that the Nasdaq is back to where it was in February 2020 when accounting for money supply. If we look at the Dow Jones, which is a much more value-based economy, so less growth in there, it's obviously held up a lot better in recent... let's just copy this. It has held up better in recent months as we've seen growth get hit really hard in the equity markets due to the threat of rising rates. But if we look at the Dow Jones compared to where it was in February, you can actually see that if you left your money in the Dow Jones, your dollars have gone backwards 45% due to all the quantitative easing, and the Dow Jones is actually 18.5% down from where it was before the COVID crisis and before the printing began. So I find it quite interesting because I'm a complete sado, but maybe you find it interesting too. If you do, please, like it and stuff that you meant to do on YouTube.